Hey guys, so in this video we're going to provide an update on the performance of my investment portfolio. This update will be a little bit different to my usual updates, as previously I did separate videos for each of my portfolios. However, recently I've had the feeling that I've been repeating a lot of the same content in these videos. So I put out a poll whether I should consolidate my InvestEngine, Monzo and Trading 2 video updates into one single video. And the overwhelming answer was yes, with a whopping 67% of the vote favouring one consolidated video. So this is the first video, the first consolidated video, where we'll go through all my portfolios in one go, and let me know in the comments whether you like this format or equally whether you don't like the format. If you're new here, I'm Alex, a management consultant by day, and on this channel we like to discuss all things personal finance with particular focus on how to grow your money. If you'd like to follow my own personal finance journey with regular portfolio updates in my journey to reach a 100k portfolio within the next 2 years, as well as a bunch of other personal finance related videos, then I greatly appreciate subscribe. But for this video, let's get into it. We're going to structure the video in 4 parts. Firstly, we'll provide a market update, looking at the overall market performance over the past month, and we'll dig into the reasons driving that performance. Then we'll go through my individual portfolios and their performance. And after that, we'll take a look at the total collective performance among all my portfolios. To finish off, in the final part, we'll go through my future plans for the portfolios. So let's kick off with a market update by taking a look at the performance of major indices around the world. In the US, the main stock market index, the S&P 500, was up by 1.36% over the past month at the time of recording. In the UK, the main stock market index, the FTSE 100, was down by 0.53% at the time of recording over the last month. And similarly, in Europe, the stock market index, the Stoxx 600, was down by 0.64% over the past month at the time of recording. So overall, it's been a bad month for Europe, but a good month for the US in terms of stock market performance. And one of the biggest topics influencing the good performance in the US stock market has been the presidential election. A combination of Biden's continued wobbles on stage and the Trump shooting incident have seemed to increase the odds of Trump becoming president, and the markets have largely reacted positively to a potential Trump victory. The reason seems to be because Trump's policies point to a very pro-business environment with lower taxes and deregulation, and a pro-business environment tends to be good for the stock market. This hypothesis proved true during Trump's last presidency, as despite having a lot of questionable policies, his tenure oversaw a big rally in the stock market. During Trump's presidency, the S&P 500 increased by nearly 70%, driven partly by pro-business policies such as corporate tax cuts and deregulation. Compare this to Biden's era, where the S&P 500 has only increased by around 41% so far. Obviously, take this comparison with a pinch of salt, as who the president is, who sits in the White House, is certainly not the only factor influencing stock market returns. So many other factors influence the stock market, and this year's election alone likely won't determine market movements. What may have a bigger impact is the policies of the president and whether they'll be able to enforce them. This is largely dependent on which party controls Congress, since although the president is often seen as the most powerful man in the world, the most significant policies in the US need to be passed by Congress, and if Congress isn't controlled by the same party as the president, it becomes an uphill battle for the president to get their policies through. At the moment, we don't know for definite who will be the president, and we don't even know who will be the controlling party in Congress, given there's elections for both later this year. But nevertheless, it's hard to deny the current market movements have been positive towards the potential of a Trump victory. However, it hasn't been a complete smooth sailing experience between Trump and the stock market this month, as the week before I recorded the video, Trump single-handedly actually caused a tumble within chip stocks, the type of stocks which have been driving most of the returns in the global stock market this year. He caused this tumble by suggesting that Taiwan, the region central to the chip-making industry, should pay for its own defense, and that the US were considering tougher restrictions on trading chips with China. Following these comments, the tech-heavy Nasdaq index went down by 2.8% in one day, and the S&P 500 went down by 1.4%. These index declines were driven by heavy falls of specific chip stocks such as Nvidia, which went down by 6.6% in one day, and AMD, which went down by 10.2% in one day. In fact, the wider chip industry had their worst stock market day as an industry since 2020, with the Philadelphia Semiconductor Index falling by around 7%. This one-day decline shows the power of the US presidential role on the stock market, as comments from someone who isn't even president sparked all of this, based on the assumption he'll win the presidency and enforce policies aligned with those comments. So given this, and given that Trump does tend to make wacky comments, I would expect more big stock market movements as a result of Trump's comments in the lead up to this election. So I think we'll be in for a bit of a ride here over the next few months. Nevertheless, coming back to this month's overall performance, despite a tumble among chip stocks, it's been largely a good month for the stock market in the US. Now we know this, let's move on to part 2 and take a look at my own portfolios. And let's kick off with my InvestEngine Stock and Shares ISA, given this is my biggest portfolio and where the majority of my monthly deposits go. We can see my InvestEngine portfolio has a balance of £28,459 at the time of recording. And in terms of performance, the portfolio is in the green marginally over the past month. It's up by £165 in pound terms and 0.12% in percentage terms over the past month. And if we zoom out, the overall portfolio is up by just over 17% in percentage terms and just over 2,500 in pound terms since I opened it. And it's actually likely to be a little bit higher than these numbers are giving it credit for, because I've also had dividends in this period which are not considered in these numbers. I've had £166 in dividends in the period since I opened this portfolio, and all these dividends went straight back into the portfolio. So in reality, the total gain in terms of percentage gain and pound gain is likely higher than these numbers are given credit for. Nonetheless, I'm still happy with the portfolio's performance since I opened it. And coming back to this month's performance, we can dig deeper into this month's performance using the graph feature here. We can see there was a spike in the value of my portfolio at the end of June when I made my usual 1,500 monthly deposit. But performance-wise, it's been a rather stagnant month, albeit with a noticeable dip at the end of the month, which was likely caused by bad performance in the US stock market in the days prior to recording this video. Nonetheless, the portfolio is still in the green this month, which is positive, given that this month has seen a lot of turmoil around the world, which has influenced the stock market in many different ways. Before we take a look at the individual ETFs making up this portfolio, I want to point out that InvestEngine still have a great sign-up offer active, where you can get a bonus of up to £50 when you invest at least £100 with InvestEngine as a new customer, subject to meeting terms and conditions of course. The link to this offer is in the description if you're interested. But coming back to this portfolio update, let's take a look at the individual ETF performance. And let's start with my World Index Fund, the HSBC MSCI World. This fund dominates my portfolio, making up over 70% of my InvestEngine portfolio. And the fund didn't have a great month. It was marginally down. It was down by 0.28% over the past month. The next fund fared a lot better. The MSCI World Small Cap Fund was up by 3.88% over the last month. The reason for this good performance seems to stem from optimism of upcoming Fed rate cuts, or potential rate cuts, as these potential rate cuts would significantly benefit smaller companies because smaller companies tend to have higher debt burdens. And a reduction in interest rates would mean their existing debt is lower cost, and if they want to use borrowing to fund growth in the future, this would also be of lower cost in terms of interest than what they pay today. So if there will be rate cuts, this will significantly benefit small caps, and the increased potential of rate cuts happening sooner rather than later has led to investors piling money into smaller companies. So I'm very much hoping that rate cuts happen soon, as this will hopefully benefit this ETF and lead to further growth. The next fund is my Emerging Markets ETF, and this was down by 1.12% over the past month. And the reason for this negative performance is likely impacted by the increased potential of a Trump victory, given that one of his main policies is protectionism, which would make it harder for emerging markets to sell their goods and services to the US if he did get elected. So I can understand why there's been negative performance in this fund over the past month. Moving on to the next fund, my Gold Fund. This fund had a very good month. It was up by 3.71% over the past month. And the final fund for my passion sector in the Cloud Computing Fund also had a very good month. This was up by 5.18%. And the performance this month is very welcome, as for most of this year, this fund has been in the red, it's been negative. So I'm hoping this trend of good performance for this fund continues in the coming months and the coming years. And overall, it's been a good month for 3 out of the 5 ETFs in my portfolio. And the combined performance of these 3 ETFs has outweighed the negative performance of the MSCI World and the Emerging Markets Fund, leading to a combined collective positive performance for this portfolio over the past month. And now we know the portfolio performance for my InvestEngine portfolio, let's take a look at the next portfolio in my Monzo portfolio. This portfolio is a small portfolio where I deposit £100 a month into, and here I have 2 accounts in my stock and shares ISA and a general investment account. And the combined total balance is currently £1,189 at the time of recording. In terms of performance, I'm up by 8.11% in percentage terms and £89 in pound terms overall since I opened this portfolio. And in terms of the performance over the last month, we can use the graph feature here. We can see that I started the month with a balance of £1,078 and I ended the month with a balance of £1,189. So the difference here is £110.27, and £100 of that came from my deposit, my monthly £100 deposit, and the remaining £10.27 came from an increase in the value of the investments. So I'm in the green by just over £10 this month in terms of performance. And this performance isn't too surprising, as with Monzo I invest in the single fund, their ventures fund, aka the MyMap 7 BlackRock fund, and this fund is largely exposed to American stocks, which have done relatively well over the past month. So it's not too surprising that because American stocks have done well and because this fund is mainly exposed to American stocks, this fund was also in the green. So overall, also a good month for my Monzo portfolio. And now we know the performance for my Monzo portfolio, let's take a look at my final portfolio, which is with Trading 212, and this is my individual stock portfolio. The numbers you see here in terms of the total portfolio value and also the total stock value may go up and down slightly as we go through this video in terms of the app you can see here. And the reason for this is because I'm recording this during the trading day, so the numbers are literally live. But at the time of recording, the portfolio has a current value, a current balance of £809. And overall, I'm up by £221 in pound terms and 37% in percentage terms for this portfolio. However, these figures relate to the period since I opened the portfolio. The performance over the last month is very different. Over the last month, this portfolio is in the red, and we can calculate the performance using the graph feature here. We can see that I started the month with a portfolio balance of £752.72, and I finished the month with a balance of £809.55. And if we take into account the deposits I made during the month, I made £62.81 in deposits, and minus that from my current balance, we can calculate that I'm down by around £5.98 in pound terms over the past month. So this portfolio is in the red over the past month. And it's not too surprising that out of all my portfolios, this was the one in the red over the past month, as this is my riskiest portfolio investing in individual stocks, whereas with my other portfolios I invest in funds which are diversified across thousands of companies. Nonetheless, I'm only investing a small amount in this portfolio compared to my other portfolios, so I'm willing to take the risk here. And coming back to the performance, in terms of the individual stock performance over the past month, we can see that the first stock in Alphabet is up by £65 overall in pound terms and 39% in percentage terms. And if we click on it, we can see that over the past month, this stock was up by 2.29% in percentage terms. The next stock in Microsoft is up by £104 in pound terms overall and 65% in percentage terms overall. And if we click on it, we can see over the past month, this stock was down by 1.56% in percentage terms. The final stock in ServiceNow is up overall by £53 in pound terms and over 20% in percentage terms. And in terms of performance over the past month, this stock was up by 2.72%. And this ServiceNow stock was actually the only stock in my Trading 212 portfolio which I deposited into over the past month. I made £62.81 worth of deposits into this stock over the past month. Overall, now gone through all 3 stocks, we can see that Google and ServiceNow were up over the past month, but my overall portfolio with Trading 212 was weighed down over the past month by the negative performance of Microsoft. So my Trading 212 portfolio was negative over the past month, but fortunately my other 2 portfolios in my Monzo and InvestEngine portfolios were positive. And let's now look at the collective performance among all my portfolios in the next section of this video. The total balance across my portfolios at the time of recording is £30,457.25, with £28,458.51 coming from my InvestEngine Portfolio, £1,189.19 coming from my Monzo Portfolio, and £809.55 coming from my Trading 2 and 2 portfolio. Over the last month, I made a total of £1,662.81 in deposits into my portfolios, with £1,500 going into my InvestEngine Portfolio, £100 going into my Monzo Portfolio, and £62.81 going into my Trading 2 and 2 portfolio. Finally, in terms of the performance of my portfolios, overall I'm up by £170.01 in terms of gains across my portfolios, with my InvestEngine Portfolio up by £165.72, my Monzo Portfolio up by £10.27, and my Trading 2 and 2 portfolio down by £5.98 over the last month. The gains of £170.01 equates to around 0.55% in percentage terms. So overall, my portfolio is marginally in the green over the last month. In terms of future plans for this portfolio, I plan on continuing to invest £1,500 every month in my InvestEngine Portfolio in the same ETS you saw today. And I plan on continuing to invest £100 a month in my Monzo Portfolio. The plan is to carry on investing these sums for the rest of this ISA year and to max out my 20k ISA allowance in these two portfolios. I don't have any immediate plans to make deposits into my Trading 2 and 2 account, but I may be tempted to put some money in the Service Now stock if that goes down a bit. But that's probably about it in terms of deposits I'll make in my 212 account this financial year. I hope you've enjoyed the video. If you want to find out my plan for building up this portfolio to 100k within the next 2 years, then I have a video around here. But for this video, thanks for watching.